to talk about why they are doing peer-to-peer lending or borrowing, and what's motivated them, what they like about it, what they don't like, their general view of peer-to-peer lending, and to be able to talk directly to you. So this is a completely unorchestrated, high-risk bit of experimentation. But I'm really pleased that we have 4 people who've been prepared to come up and do this. So can we first of all thank them all very much. And perhaps you'd all like to introduce yourselves, going from this end to that end.
Okay, do you just want your name or do you want to...
Just a name and a little bit about you.
Right. My name's Elaine Banks. I'm retired and I try and spread my money as thinly as possible to maximise my return on it. I don't have a great deal of money. Mr. Poverty and I live within our means. But I've been with Zopa for about 8 years and I've been very happy with the experience. I won't go into details now.
Okay. Next, please.
My name is Robert Hartshorn. I'm a composer by trade. I run a company called ECG. The full title is Ex Cantibus Gaudium. You can see why it's shortened to ECG. I am also developing interests in China, both on the music front and also a TV franchise out there. And that's probably a bit of an introduction.
Yeah, that's great.
Is the microphone working?
You need to press the button down until it goes green. Yes, the top button. That's right.
Done. So my background was in finance. I was a trader for a while. Started looking at peer-to-peer early last year as a lender.
You're Ben.
I'm Ben. And it struck me as having potentially some very good returns for the risk that are available. So I'm very interested in and fascinated by the sector, how it's developing, a lot of my savings.
Great, thanks Ben.
Hello everybody, my name is George. I'm currently working in the finance department of an insurance-based company, Partnership. And I borrowed from Rent Setup back in 2010
Okay, so random sample here of borrowers and lenders. I'm going to start, I think, with the borrowing side, because after all, unless you've got people wanting to borrow, you're not going to have anyone or any need for anyone wanting to lend. So can we, George, can we just hear a little bit more about, what was the journey you went on? Why do you want to borrow? And why did you choose to borrow from one of these peer-to-peer lenders? Why not just go to a traditional bank or someone else?
Well, actually, back in 2010, I was looking for a loan for quite a while with some tie-ups and a few odds and ends like that. And I wasn't able to borrow from banks. I tried sort of pretty basic, and I was mindful that if you keep it rejected, you can't be credit card. So someone told me about peer-to-peer lending, and I knew I had a very good credit card. So I knew that that wasn't the reason I was being rejected from the banks. And what I found interesting with Rent Setup was that they didn't just give a yes or no answer. They reviewed the application, phoned me back within 24 hours, asked me a few more questions, and appeared to adopt a common sense human approach. And I think that was the main attraction of being involved in the first place. Subsequently, I've had a couple more loans to life events that have cropped up that I needed some finance for, and again, they've been excellent in helping me to do that. And I think, why go to a bank? You've got an option of helping people to get a return on their investments, and meeting in the middle ground. I think it works well. I can see a lot of industries going that way.
Why do you think? Why were the banks turning you down?
I looked at my credit file. It was all green, all zeros, no credit works, and I don't know. I've been looked for a while. Maybe I've not been off my dress for too long. Something silly like that was generating a score. A computer said no type response. And what Peter and the team at Rent Setup did was that they looked at probably looked at my credit file and made a common sense decision. Because they got the lenders to think about to protect their investment. And I think it must matter that the incentive is not one-sided. You've got people that want to borrow at a decent rate, which of course you can obviously achieve a better rate by going through P2PFA. And you've got people that want to better returns on their savings. I just think it's a no-brainer, and I think the industry is clearly going to grow.
Any downside?
Downside? No.
Not so far anyway.
From a borrower point of view.
Have you tried paying back early on anything you've learned?
I did recently. I don't currently owe anything to on my loans from my assets, and it was simple. It just took money the next day from my account. I do agree, great.
Okay, good. Robert, how about you? Business borrower.
Yes, well, for I suppose a total of 8 months, I have been trying to raise finance to carry on developing the strands of business that I had been, with no success from the banks. If you go into I've been to all 4 of the big ones, and if you go in with words like music, China, TV production, international market, it's like sitting opposite a Dalek that's got a short circuit in the brain. There's just not a button on the screen that you can press, and the big problem for me was I was not talking to the decision maker. It used to be that you could talk to a decision maker. Now I was talking to my relationship manager, who was trying to understand what I was doing. Or in another bank, you talk to someone similar. And okay, it's a fairly complex area to get your head around, but I was doing my best to explain it. It got to a stage towards the end of the year where, unless I got some funds in place, particularly to start the promotional trailer for the animation series, which is a vital part of it, we were actually going to lose opportunities in a few months' time. And I've known of Funding Circle, who the peer-to-peer lender lent to me, for some time. And for whatever reason, maybe the bad experience with having been through banks and what they asked for, I naturally branded everybody who lended in the same way.
How many banks have you tried?
5.
5?
5, yes. I can run off the names.
No. Pretty well guessed.
So I did. I phoned them up, and again, it was, as you say, it was a straightforward approach, and I had a lot of documentation ready, and gave it a go. And I was surprised at the speed at which things happened.
How fast?
I suppose from the start, from the first phone call to when I got funded, was about 2 to 3 weeks. The ease with which all that happened was great. So the funds arrived. It took 2 days for me to get the funding online, as I was just saying to somebody. I was constantly clicking the screen to see how fast it was filling up. And I've been able now to carry on with the project, which is now underway, and we're going to be able to meet what is the deadline at the end of March.
Have you got any idea who the people are who are lending to you? What sort of people, just out of interest?
Well, funnily enough, I was talking about this to the father of my youngest son's girlfriend, and he said, yeah, I'm a Funding Circle investor. But he hadn't invested in me.
Any downside from your experience so far?
No, I have to say, I haven't had one, and I can't think of one.
And what about the rates? I mean, the interest rate you're paying compared with what you might if you had been successful in getting a loan in a bank. I mean, was that part of it, or no? It's really just access to
Not really. I don't think it's that much difference,
No.
to be honest. And I was at a stage where that was really not a consideration.
No, you just wanted the money.
Yeah.
George, just to go back to you, was the rate part of the attraction for you?
In a similar way, I was looking for a loan, and the rate that was offered initially was a good rate. You know, I had regrets, so I think you try and get a better rate, but I love the idea that you can try to get what rate you like, and I think they are better than banks overall. I certainly when you start borrowing higher amounts, I think that the banks can offer a very good rate, such as 4.7%. That lower than 50% is you always get a better return. I think
Okay, so we've heard a couple of examples of borrowers there. Let's turn to the lending side. We've got two very different examples. We've got Ben and Elaine. Ben, why don't you kick off here and tell us about why you decided to put some of your money onto P2P lending platforms?
So, early part of last year, I had some funds to invest into a bank account. Obvious things that rates are very low in banks, stock markets are quite volatile, and saw about peer-to-peer lending. My background, as I say, was in finance, and I'm quite used to assuming the markets price risk more or less correctly. So when I saw this particular site they offer 8%, 10%, 12%, I just assumed there must be risk there somewhere. But thought it was at least worth exploring, and as I dug deeper, most of what I discovered boosted my confidence in it, and I got to the point where I made a few investments. Things went well enough with those. I enjoyed not only the sense I was getting a better rate on the money, but also a sense of control about where my money was going, in a sense of contributing to the economy generally. So got to look even deeper into it, got to talk to some of the people on the platforms, and again I found that very useful and helped me to become more confident, and go from that, become quite fascinated by it now, and still looking into the range of things that are available, because I think peer-to-peer, yes, there are some things that all the different platforms have in common, but also it covers a lot of very different asset classes, really different levels of risk and return, and I think as the market develops, it will become more important for that to become more clear.
And Elaine, you're a consumer well, you're both consumer lenders, but you haven't worked in financial services at all, have you? Tell us about why on earth you got into this, because you did it quite early.
Yes, well, my husband and I retired in 2005, and I think Zopa was starting up around that time. And I think I probably saw it on a website like Money Saving Expert, which for a lot of people like me who know very little about finance has been a wake-up call, I suppose, to get our act together with a little bit of money that most of us have. Anyway, I dipped my toe in the water with, I think it was £100, just to see what would happen, and been adding to it ever since. At one point, Zopa offered £100 if you referred a friend. So I referred Mr. Poverty, my husband, £100, on the understanding he'd take me out to dinner with it, which I did. So that was really nice. I mean, over the years, I've put not huge amounts because the one thing that worries me about peer-to-peer is the business of the government not doing compensation that you have when you put your money into a building society, you know, that 85,000. So I tend not to put too much in, but I think I put about £7,000 in over the years and taken some back out. But actually, from what I've seen over the last 8 or 9 years, the risk is very, very low, and the rewards are quite high, commensurate to the risk that I'm taking. And also, I very much like the ethical side of it, that I'm lending to people who need reasonably small sums for specific things. Might be a car to get them to work or whatever, and it goes directly to people. Yeah, I like the model.
You mentioned that the funds that you lend are not covered by the FSCS, and you don't have the same guarantee to get your money back that you would if you had up to 85 grand That would be nice, wouldn't it? In a bank. I'd just like to ask both you and Ben, how clearly do you think the risks and the information about what happens to your money is explained to you on the website, you know, whichever platforms you're investing in? Do you think you're fully aware of what it is you're getting into?
For me, yes, because the website is very clear, and to have a user-friendly website is a big thing in my life, because I'm not terribly au fait with technology, so I tend to steer clear of anything I don't understand immediately on a website, so that's been a huge boost.
Is there any jargon?
Very little, or unless, having read Money Saving Expert for the last 8 years, I'm not getting used to financial jargon, I don't know.
Ben?
So I felt that it presented what was happening in a clear way. There was reasonable information about the risks. Something I felt was lacking was some sort of independent verification. Even the most basic things, does this site really exist, and is my money actually going to where they say it is? And it seems something where, so perhaps the association can do something in this area, but just where there's some sort of verification of what the platforms themselves say they do. So once you can trust that, I feel I've got a good understanding of the risks. So maybe it's covered by a provisional fund, maybe it's secured on property, and I can grasp that and work out what I think my risks are of that. But there's always that question, is this really happening? I think both from a lender point of view and from a platform point of view, everyone can win if there's some way of that becoming clear, verified, audited in some form. I don't know what that's.
That's a good point. I mean, obviously the association, if you are a member of the association, you have to be a bona fide business and you have to abide by our rules, which are fairly tough. But it's a question of convincing consumers that they are tough and they are real and all the rest of it. And I think we need to look at that. And obviously regulation is going to make a difference when it comes in. If you are FCA regulated, we'll hear about that shortly, then I think consumers will understand that there are some proper standards applying that are formal legal standards. What about getting your money out? Can I ask the two lenders, what if you want to get your money out early? You know, you need the funds all of a sudden in a way you hadn't thought you did. Have you tried doing that?
Yeah, it depends obviously on the platform. It varies. I think one needs to understand before investing how available the funds are. So on some of the platforms, it's not quite as transparent as it could be. It's possible to get your money early, but there are various fees for doing that. It's not so clear. On other platforms, it's much more straightforward. Now that platforms are often running quite liquid secondary markets, so people who've already got loans can sell them on to other lenders who want to get into loans, diversify, and I found that usually easy to do. Overall, I feel much more enjoy my money with these sites, because when I wanted to withdraw money, it's a cash investment, and then withdraw it, it's been very straightforward to do. Compared to sending some unit trusts a little while ago, you have to send various forms off, you have to wait the next day for them to fix a price, it takes a week for money actually to arrive. Maybe because of regulation, maybe just because they want to encourage the inertia of people holding on to investments, but it would be a big contrast with those groups.
Elaine, anything?
Yes, could I just say that I just quite dismissively said that I found it a problem with the lack of regulation with the government. I can't remember the name of it. But Zoba actually has put into place something called Safeguard in the last year or two, and that actually is not a total safeguard, I suppose, because the whole financial business of Britain went down, so Zoba. But it's a very reasonable one as far as I can see. And as far as getting the money out, there's a rapid return service that if I needed to have it very quickly, it would happen. Maybe not 100% of my money, but certainly most of it. And also the fact that although you lend to people, usually for a 5 or 3 year term, most people that I lend to seem to pay back much faster than that. and the money comes in faster than you might reasonably expect if you're expecting a 3-year or a 5-year turnaround. So that at any time I could just stop re-entering the market, and it would build up quite quickly anyway, even without the rapid return of service. So as a lender, in a small way, I'm very happy with that side of it.
Okay. Anyone got any questions in the audience for our panel? Yes, there's one there.
Thanks. Hello, I'm Pamela Meadows from the Financial Services Consumer Panel. I'd like to ask George if he considered any other form of borrowing apart from going to the banks, like did he look into payday lending, for example? And I'd like to ask the two investors what proportion of their portfolio they put into this sort of activity, roughly speaking.
Okay. George.
Hi, yes, I can answer your question. I thankfully avoided payday loans, and I've never got involved with those. And it wasn't suitable for the type of borrowing consolidation I was looking for, so they were just added to the problem. I did look at banks, I did look at a couple of different peer-to-peer platforms before finally settling with rate setup. And I'm not sure if I tried a loan company, but I think I did try. I looked at loan companies, but I found the interest rates astronomical. So I avoided those two.
So you were driven really by rate and...
It was a case of wanting to consolidate a number of things I had.
You were consolidating your debt.
Yeah, some credit cards.
Yeah,
It's
that's quite common. Yeah.
But I didn't want to pay back more than
No.
the individual companies. And some of the loans, when you work it out, it works out to you have a lot more.
Absolutely.
Over 5 years compared to...
So you did a fair bit of shopping around, really.
Absolutely. It's
Yeah.
a forced process of trying to find
Wow.
a suitable product.
Okay. Now, second question was about... I've forgotten it.
Proportionate.
But that's right. What proportion of your portfolio, that sounds a grand word, doesn't it? What proportion would you
So,
put this way?
so I've got one which I'm prepared to lose, which I'm happy to take some risk on with the aim of getting higher returns on that. And I've got about 50% now. I'm probably anomalous in that I've spent quite a lot of time looking into it. I'm quite comfortable with how it works, and I can imagine it having a larger proportion. It seems to me at the moment, not you have to be selective, but within that, with the right deal, it beats the other investment options that I can see.
And Elaine?
Well, that's a difficult one because most of the proportion of what you might call our portfolio is sitting in our children's homes at the moment because we have to help them get onto the housing ladder and onto the business ladder, which, although they say they're loans, I don't know. So, I think that a more straightforward answer would be an increasing amount from the point of view of my husband and myself as we trust peer-to-peer lending more and more, as we see it working for us.
Okay, well, we've got hands going up, but we're getting over time, so I'm just going to take... I'll see Samantha. Yeah, we'll go that way, because that's... I'm so sorry, but we'll have to come back to you at another session, because this is the last question. Very quick, please.
Could I just ask the lenders how they assess the lending opportunity? Are they mainly looking at the coupon or at the risk? And how do they assess the risk? How deeply do they go into it?
Right.
I don't understand the term coupon.
Yes, please, explain.
The interest rate.
Ah, right. Well, both. It's a balancing act always, isn't it? And I mean, like most people, I imagine, we have money in some fairly high-risk shares, right down to Nationwide Building Society, which pays us peanuts, but is reasonably safe. So it's a continuum.
Ben?
For me, first of all, I need to trust the platform. We think about so I have some trust there. Once I've got that, it's obviously trade between the rate of return and what I see as a security, but whereas at the moment actually there isn't much return because there are secured loans which pay some of the best rates in the market. I can't imagine that will last for long, but it seems a number which at the moment don't have to make much for trade.
Okay, we're going to have to draw a line there, I'm afraid. This could have gone on for at least another 10-15 minutes, but thank you all so much for being prepared to come up and do this.